call of Bear Stearns was a done deal, but it still needs shareholder approval. So what is the next step, and is the battle really over? David Faber's been working his sources on this story. Can't wait to hear what you got here as we watch the stock continue to trade well above the offer price.
You know, this has been unique in so many ways, including, of course, the way the stock is trading. Bear Stearns stock trading almost 200% above the implied price of J.P. Morgan's deal to acquire it. That premium reflects two key beliefs. One is that the deal will be voted down by Bear shareholders, and Bear will be able to forge ahead on its own after that vote. The other is that another acquirer tops J.P. Morgan's offer. Both are not likely to happen. It is possible that angry employees, the 9.5% holder Joe Lewis, and others might be able to garner enough votes to turn the deal down, but that doesn't mean that Bear will be back in business. First off, under the deal, J.P. Morgan has the right to call for any number of shareholder votes during a one-year period in order to get approval. And if it gets voted down the first time, it has been made more than clear to me by people close to the deal that J.P. Morgan, which is currently running Bear Stearns, could then choose not to guarantee entire lines of the firm's business, cutting off liquidity to certain areas. That gives J.P. Morgan enormous leverage. As well, between now and the vote, some of Bear's best employees are going to find jobs elsewhere. Finally, on the subject of another bid, consider this. Everyone I've spoken to who worked on this deal has made it clear this is what the Fed wanted. It is far from clear the Fed will give any other bank the $30 billion in liquidity it's providing J.P. Morgan. And if there is another bid, J.P. Morgan has the right to buy 19.9% of Bear at $2 a share and purchase its building 30 days after the board of Bear recommends a different deal. Those are, as we say, gating factors.
Yeah, that would be rather important at that point. Let's add Lauren Silva from BreakingViews.com to our conversation here as well. And Lauren, the fact that the Fed's involved in all of this, I would think, makes it almost a fait accompli for J.P. Morgan Chase. Am I wrong on that?
No, I think you're right. There's a lot of reasons why shareholders who are buying into the stock at $6 a share are missing a couple of points. The fact is the Fed bailed out Bear Stearns this weekend. It was on the brink of insolvency, and in reality, shareholders need to ask themselves what they're going to be getting in the future if they vote down this deal. Bear Stearns' business is winding down, new business is going to J.P. Morgan. They're really not going to have much left over.
The second the Fed put up money, the shareholder was toast.
I would think
They're
so.
lucky they got $2. You cannot put up taxpayer dollars and let the shareholder walk away with a lot of money, because then Hank Paulson can't go on the Today Show and say, this wasn't a bailout. The shareholders got slammed. I mean, this is done. This is what the Fed wanted. The $2 was scrapped to get the deal done before the end of the weekend.
You know, one thing I've been having a hard time getting the absolute definitive story on, and it will be interesting to see the proxy when it's filed, which typically details all the back and forth. How hard did the Fed play ball here? And did it really get involved in the price negotiation itself? I don't have an answer to that.
The rumor is that J.P. Morgan offered much more than $2 a share, and the Fed said, we will not take it at that price. It's got to go much lower.
I'm not a believer in that rumor, but I am very curious to know. And when I ask the questions, I don't get answers. What role did the Fed play in dictating price, if any?
Lauren?
Well, the Fed really has one role, and that is to stabilize the markets. And, you know, there's an argument that J.P. Morgan could have gone into Bear Stearns this weekend and, yeah, sure, had a higher price. And as the weekend went on, that price lowered, and there's nothing necessarily wrong with that. The Fed, though, has no responsibility to Bear Stearns shareholders. Their responsibility is to stabilize the market. And in this deal that they've made with J.P. Morgan as a conduit, that in fact does stabilize the market. So I'm not sure necessarily if there's another
question. So
who's
buying shares of J.P. Morgan?
Well, you know what?
Bear Stearns.
One important point here: a lot of bondholders may be buying the stock, and by the way, they're buying it in order to vote in favor of the deal.
I get that.
Because they got bailed out.
Well, because they were buying a piece of paper on Friday that was trading at 70 cents. J.P. Morgan credit, of course, will make that piece of paper 100 if you vote this deal down and it files bankruptcy. That's a bad day.
But when this deal closes, the shares are going to $2.
Yes, they are.
So who's going to buy it at $6, knowing that they're going to lose?
Any number of people who believe that if you vote it down, the company will be able to ultimately live on, and or believe that J.P. Morgan will either be forced to raise or that another bidder will come in.
Well, there's also a logical argument for why bondholders are buying into stock at $6 a share and may only get $2. And the answer is, if Bear Stearns gets pushed into bankruptcy, their investment as a debt holder in Bear Stearns could be worth a lot less than the spread between the the price which they buy into and the current price. So it might actually end up losing them less money.
Yeah, it's a math equation for a bondholder.
That's right.
So what happens?
Best I can tell, and again, it's a fascinating situation. It doesn't appear to me that those who are buying the stock at these levels are going to be rewarded.
Joe Louis loses $1.19 billion.
Well, he may not want to think of it this way, and we'll see. I mean, I would never offer a conclusion, Bill, as you know. I just prefer to keep making phone calls.
But we keep bringing you back anyway. Lauren, thanks for your time today.
Thank you
Appreciate it
very
very much. We'll see you guys later as well.